How's it going, everyone? This is Nick. I'm back here with another Reventure YouTube cast, and today we're going to have a battle royale of sorts. We're going to pit Austin against Nashville. We're going to put these two cities against each other and look at data to determine which city offers better future growth prospects and better value for real estate investors and home buyers in 2021. I really like these two cities and putting them against each other because both Austin and Nashville are two of the fastest growing cities in the US. They're actually probably the markets that I get asked most about from real estate investors around the country. People are really intrigued with all the job growth, all the business growth going on in both of these cities. People also want to move to these cities because they offer a high quality of life. They're both in warm climates. They both have big music scenes, and there's a lot going on. So in today's video, we're going to look at the data in 4 key variables to determine which of these two cities, Austin or Nashville, is where real estate investors and home buyers should target in 2021. The 4 variables we're going to look at include job growth. Number 1, after all, if you add jobs, that's going to increase demand for real estate. Number 2, we're going to look at wages and income. If people make more money, they have more money to spend on real estate. The third thing we're going to look at is value and affordability, i.e. how cheap and affordable is it for you to buy a home or an investment property in one of these markets. And the fourth thing we're going to look at is political stability and political climate. We're going to take a look and see which of these two cities has a better long-run political outlook and how that might affect the real estate market in these cities. So without further ado, let's get into it. So both Austin and Nashville are absolutely crushing it when it comes to growth. Both cities are adding lots and lots of jobs, lots and lots of new population every year. And why are they doing that? Well, both cities are actually relatively affordable to live in, and they combine that affordability with lots of economic opportunity. So, if you just do a quick Google search, you'll see left and right all these new businesses and corporations relocating to either Austin or Nashville. Most recently, you might have seen that Oracle is relocating their headquarters to Austin. Meanwhile, Alliance Bernstein, a big financial firm from New York, is relocating their headquarters to Nashville. And that's just the tip of the iceberg. This type of business and commerce growth is really good because it creates jobs. And after all, jobs is what stimulates real estate demand. If you're adding jobs to an economy, those jobs, those workers are going to need places to live, whether they're going to rent an apartment or whether they're going to buy a home, and that's going to have a positive impact on real estate values. And you can see that evidence on this graph, which looks at the percentage increase in jobs in Austin, the blue line, Nashville, the red line, and the rest of the US, the gray line, over the last 5 years. And the first thing that sticks out to you here is that both Austin and Nashville are far above the US average in terms of job growth. That's a really good sign for both of these economies. They're stimulating demand and they're adding jobs well above the US average, which unfortunately the US is actually lower today in its job count than it was in 2016. But Nashville is plus 9%. Austin is plus 15%. And if we kind of go back in time, you can see that both Austin and Nashville were kind of neck and neck in terms of job creation through early 2018. But then it was in 2018 where Austin, the blue line, started separating itself a little bit from Nashville in terms of job creation, right? And then it was really actually the COVID pandemic and this subsequent decline in both of these markets, which kind of gave Austin an even bigger advantage because Austin really just vaulted back up from the COVID decline to be basically at more or less its previous high in jobs, whereas Nashville's recovery from COVID has been a little bit slower than Austin's. I hope you guys are enjoying the data presented in this video. If you are, please hit subscribe down below. Please also leave a like and leave a comment. I love hearing your thoughts and opinions. I also really love making these videos, and it just makes it way easier for me to make these videos if you guys engage with them. So again, please hit like, please comment, and please subscribe. So the things to take away from this is that both Austin and Nashville, really strong job markets, far above the US average. However, Austin is just exemplary in terms of job growth. Plus 15% over the last 5 years. That's in the top 5 of all metro areas in the US. There's really no comparison for it. Nashville plus 9%, it's really good. It's just not quite as good as Austin. So Austin gets the edge in terms of job growth and economic growth. The more jobs being added in Austin is creating more of a demand for real estate in the market. And in this indicator specifically, real estate investors should prefer Austin to Nashville. Now, again, both of these markets showed really good job growth. It's not as if Nashville's job growth was bad. It just wasn't as good as Austin's. And in fact, both of these markets were far above the US average, which is a good thing. Now, jobs aren't the only thing that matters. It matters also how much money are people making, right? Not just can you get a job, but can you get a good job, a good paying job if you move to a city? And that's the next important thing that we need to analyze, because that also has a large implication on real estate values. The more money that people make in a local economy, the more money they will have to spend on rent and to spend on purchasing a home. In particular, if you're purchasing a home, usually a bank will give you a loan based on your income level. The higher your income level, the higher the loan you can get, the more values go up in the market. So the next thing we're going to look at here is earnings and income in each economy. So what we're looking at on this graph is the average hourly earnings in each economy. So that would be how much the average worker makes per hour. And in Austin, you can see it's $29.38 per hour. In Nashville, it's $28.28. So once again, Austin has the edge. Workers in Austin make more money than Nashville. And once again, you can see they're both fairly far above the US average. Now, one thing I want to point you to is the gap between the blue and the red lines. So if we go back to 2016, you can see there's a pretty wide gap. Austin's earnings back in late 2015, early 2016 were $26.82 per hour. In Nashville, they were $23.24 per hour. That gap has narrowed considerably over the last 5 years. So Nashville's wages, Nashville's income levels are catching up to Austin. They're still not at Austin's level, but they're catching up to Austin as Nashville's economy kind of moves from being, let's just say 5 to 10 years ago, more service-based, really heavily into like the bar scene, nightlife, et cetera, to being now today more of a professional services-based economy where you have companies like Amazon and Alliance Bernstein, et cetera, moving in. So earnings in Nashville are going up. So I'm going to call the income and earnings situation a draw between the two markets. So on one hand, Austin earnings are a little bit higher, on the order of about 3 to 5% higher than Nashville. That's going to flow into how much homes cost, how much rent is in these markets. However, Nashville's like closing the gap pretty fast between the two markets. So the positive momentum that Nashville has in earnings is going to go a long way for real estate investors into the future. So I'm calling income and earnings a draw between the two. So to recap at this point, both Austin and Nashville have really good job growth. Austin's job growth just happens to be a lot better. Both markets have well above average wages and income. Austin's are slightly higher, but Nashville's are catching up. So the totality says both of these markets are really good to invest in from a real estate standpoint. However, we need to now consider the realities of what a home buyer or real estate investor is going to face in terms of purchasing a property, right? If you go into one of these markets right now and you want to buy a property, how much money are you going to have to fork over? So it's really important now to consider affordability. And generally speaking, more affordability is a good thing, right? Paying a lower price up front means that your returns in the long run are going to be better than if you pay a higher price. So let's evaluate how these markets compare in terms of their affordability, because that's really where the rubber is going to meet the road for real estate investors and home buyers in 2021. This graph charts the typical home value in Austin, Nashville, and the US going back over the last 20 years. And this is data from Zillow. And you can see that Austin is the leader in terms of home value. Austin's typical home value in January 2021 is $384,000. That's well above the US average of $269,000 and also well above the Nashville average of $305,000. So homes are much more expensive in Austin, on the order of about 15 to 20% more expensive in Austin than Nashville. Now, one thing that real estate investors would be interested in knowing is what I call the price to rent ratio. That's looking at the typical home price in a market and dividing it by the typical rent, right? And that gives you an idea of how much bang for your buck you're getting as a real estate investor. Because the higher the price to rent ratio, the more you're having to pay up front and the longer it's going to take for you to earn your investment dollars back in cash flow. And Austin sticks out here in a very negative way because its price to rent ratio of 21, and you can see that's calculated basically through its typical monthly rent of $1,529, being around $18,000 annually. If you divide the typical value of 384 by 18,000, you get a price to rent ratio of 21. That's pretty elevated, and it's gone up considerably in the last year or so as Austin's rental market has struggled while its home price market has gone way up. Nashville has a much more reasonable price to rent ratio of 15.6. You can see its typical value of $305,000 divided by annual rent of $20,000. That's fairly close to the US average of 12.8 price to rent ratio. So if you're a real estate investor buying in Austin, you're going to have to accept a lower return, potentially a significantly lower return than if you buy in Nashville. And that's a really important point to consider, because if you're accepting a lower return up front, well, you really better hope that growth over the long run is much better. So this is something that tilts the scale heavily in Nashville's favor. The fact that the acquisition price for a home or an investment property in Nashville is 15 to 20% cheaper than Austin is huge in terms of if you're an investor and a home buyer and making it an easier decision to buy. The other thing that's important is that price to rent ratio. If you buy an investment property in Nashville, you're going to get a higher return from day one. It's going to take less amount of time afterwards to earn your investment back compared to Austin, where the price to rent ratio is getting pretty high now at 21 price to rent. So, you're just going to have to accept a lower return in Austin, where there's also higher property taxes to begin with. So that makes the dynamic for an investor or buying an investor property not as attractive in Austin. And so the final thing we're going to look at is political climate, right? And we're going to look at the political climate in terms of how will the politics in these markets today impact growth over the next 5 years, 10 years, 15 years? Are more and more jobs and companies going to move in due to the kind of the politics and political climate, or are less jobs and companies and people going to move in because of the politics? And the way that we're going to proxy this is we're going to look at, over the last 6 presidential elections, how these cities voted, right? Based on whether they voted Republican or Democrat, and how much they voted Republican or Democrat, and see if we can take away key insights from this voting to see if there's some judgments we can make about these cities going forward. So that's what we're looking at on this graph. We're looking at the last 6 presidential elections, and we're looking at how the metro area for both Austin and Nashville voted. So just to give you an idea of what we're looking at here. In 2020, Nashville voted 54% for the Republican candidate, which was Trump, 43.7% for the Democratic candidate, which was Biden. That was a plus 10 margin in favor of the Republican candidate. And you can see that, going back over the last 5 election cycles, Nashville has been pretty firmly conservative Republican in how it's voted in presidential elections. The lone exception would be 2000, when it actually voted plus 1% for the Democrat candidate, which was Al Gore. Now, Austin is on the complete other end of the spectrum. In 2020, the Austin Metro voted 62% for Biden, 36% for Trump. So that was a plus 27% for Biden, the Democratic candidate. And Austin has kind of been firmly blue for a while. However, it's been becoming increasingly blue. Now, the reason I'm focusing on this is because areas that are excessively liberal have a higher risk of running into issues that inhibit growth. Now, what do I mean by that? Well, Austin now at plus 27% Democrat in 2020. How might that show up in local politics? Well, the Austin City Council voted over the summer to defund the police at a level higher than any other city in the US. It cut its funding by 35%. Now, there's proponents of defunding the police. There's people who are against it. But Austin voted to defund it by 35%, way higher than any other city in the US. Like the other cities were around a 5 to 10% reduction in police budget. Austin voted for a 35% reduction in police budget. The other thing where it might show up is something like how we treat homelessness. Austin voted to repeal a homeless camping ban a year and a half ago because they thought that would help the homeless problem. It's only made the homeless problem significantly worse. And so, my theory is that Austin's increasing progressiveness is starting to lead to local governmental policies in regards to, crime and policing and homelessness, which are going to have potentially negative impacts on growth going forward. So to be clear, this doesn't mean that, being Republican is better than being Democrat. It just means that areas that are excessively liberal, and you can see that in a place like San Francisco, places that are excessively liberal tend to run into growth issues because policies get enacted which inhibit growth. Nashville at plus 10% Republican pretty consistently over the last 5 to 6 presidential elections doesn't have those same issues. For instance, in terms of defunding the police, Nashville actually voted to expand police funding over the last year, whereas Austin voted to reduce their police funding by 35%. So, not to make this overly political, however, it is important to pay attention to the political situation in the cities that you invest in. If a place is becoming increasingly liberal, like not just a little bit liberal, but very liberal, that's something you need to pay attention to. It's a potential warning flag that's going to constrict growth going forward, and it might already be happening in Austin because there's a lot of people complaining about the increases in crime and the increases in homelessness that have occurred over the last year to 2 years. All right, to summarize, Austin is the better city in terms of economic growth. Cities are about equal in terms of how much money that people make. Nashville has a better value and affordability proposition for real estate investors, and Nashville also has a better, more stable political climate going forward. If we aggregate all of that together, Nashville is the better market for real estate investors to buy into in 2021. Whether you're a real estate investor or whether you're a home buyer, Nashville is probably the safer market, the more secure market over the long run than Austin.